Muathe, muathe.com. Here in this video, I want to take a look at the aspect of finding the best buy setup. Now, what I want to discuss here is that the best buy setup generally means also it is the best sell setup. In other words, if you find what you can term as the holy grail, so your holy grail, so your tipping point on your holy grail is your best buy point, or whatever strategy you are using is also going to be the best sell signal for somebody else. In other words, it's an inflection point where prices can actually accelerate, and at the same time, what can be somebody's best buy point is somebody else's best sell point. And I'll share this with you, and that's where you'll find that whenever you are buying something based on your strategy, if it doesn't work out, you get the exact opposite. And it's because it's an interesting dichotomy between what can be termed an ideal entry point, frankly also is the ideal exit point. Another way of saying that, be careful, because even though you might think that, and we might think that our best strategies should work, when they don't work, you get the exact type of opposite reaction. In this video, I want to capture a little bit of that. So let's take a look at BBD. We go back to the chart here in 04, and we can see that it's set up for a breakout. If it was to break out above this price here, the reason why that setup was there in 2004 is because it had a chance to break out to 3-year highs, all-time highs on the RSI, and the MACDs also had a chance of breaking out to all-time highs. So in this particular type of situation, of course, what you want to do for a breakout is wait for the stock to clear this monthly closing high. Let's call it there at about $1.40. Any breakout above that would be a buy point. So let's move forward here, and we can see that in the months after that, it did finally clear this monthly closing high. So that's definitely what we are looking for. Here we see that at that particular point, the RSI was moving to all-time highs, 3-year highs, which is one of our minimum requirements. Check the description if you are not familiar with the minimum requirements we are looking for here. But we can also see that the MACD was also moving to all-time highs. So it definitely met the minimum requirements. So let's fast forward. That was sometime in October of 2004, as you can see here. In fact, the precise date is October 1st, 2004. Let's fast forward, and now we are in 2009, and the breakout that I was showing previously was here. Right there, that is when the RSI broke out, MACDs broke out to all-time highs, and here we have the RSI also moving above 61.8 for the first time ever. After the price breakout, the stock goes on a major run before pulling back and then continuing on its run. So this was ideally the best place to go long, was during the breakout that met the minimum requirements right there in October of 2004, and we get this price acceleration. Well, let me take a side note here, just discuss the lows of 08, 09, and we can see they coincide nicely with this line here. So this was the entry of the lows. We can do it actually there, of the lows of 2003. These were the lows right there. The stock never looks back after that movement in the RSI. So we take that information and draw a line from there. Should be something like that. And you can see that this is uniform action below the line and back above it. That is one of our timing entry signals. Check the description for that. I call this method the uniformity method. So check the description for more of this. It's called the uniformity, or I call it the uniformity method. And just take a look at what happened after this entry. Of course, we know the market recovered, the entire world market complex. And so the lows we are talking about go back to this entry here. So that was perfect entry on hindsight. Based on that method, stock recovers and goes on from, let's call it the lower single digits or mid single digits to the highs here of maybe 12 before subsequently hitting highs of about 15. But let's go on here with our topic about your best buy points can also be your worst buy point. But let's just extend this line before we do that. Just want to show you that this uniformity method here gave us a double bottom, lows of here and here before moving from 9 to about 15. And recently there was uniform action below that black line and back above it. So the re-entry with uniform action was the entry here again at about $5-6 before the recent highs of about 11. Now let's take a look at the current monthly chart from a closed basis. This is 34 months or 3 years of monthly data, and we can see here that now the stock is giving us dual opportunity. Number one, if it can break out and hold above 10.56, that would be a fresh monthly breakout. So bulls are waiting for a fresh monthly breakout, and that is the attractive possibility here of a monthly breakout. That would also be pushing the RSI to 3-year highs, which is what the bulls want to see. And we can see that a price breakout will coincide very nicely with the MACDs already trading at 3-year highs. So there you have the minimum requirements based on the ultimate Muathe breakout. Check the description for more about this breakout strategy. So you have an opportunity here for a breakout if the stock can sustain levels above the recent monthly closing high at 10.56. So that's the buy point trigger. One can set an alert. Anything above that is breaking out and it meets the minimum requirement. Maybe you get a chance for a nice move over the next couple of weeks and months. So while that is the bullish argument, take a look at the bearish argument. In the bearish argument, you have to take a look at all data monthly, and now you see the other side of this argument, while this could also be the worst time to go long this stock, especially if the breakout fails. Take a look at this break off the highs of 08. We have a massive plunge after that, going to a major bear market here. Since then, this has been a resistance level, as you can see. Some of the main points here, we broke below this level here, which also coincided with the trend break of the RSI. That break was major because the stock dropped. So the break right there in 2011 off the highs there, and we come and try and hold above that level. We were rejected with uniform action off the highs here. That's a big drop from 15 to about 350, big drop. And now we see that we could be forming a double top. So month to month, if this is confirmation of a rejection level, especially with a failure to break out above 10.56, this is time to consider the opposite, which is that the stock would actually drop. So while you have an opportunity on the 3-year monthly chart for a breakout, the long-term picture is that without a breakout, you might actually be looking at the possibility of a sell signal. So as I was saying, it's a tipping point. So your best buy point, if you don't consider all the time frames, could actually be a tipping point, because not only could it be a great buy point, you could actually be looking at the possibility of a reversal. So here we have a tipping point. Either we get a breakout for a fantastic move higher, or we get confirmation of resistance and we get a massive plunge after that. Which one the market is going to decide to take, I guess only time can tell, but we can use the 10.56 as a threshold. Anything above this 10.56 level is bullish. Failure to break out is bearish. Eric Muathe at Muathe.com. As always, good luck, peace, and blessings. Oh, but before I sign up, or I sign out, one more thing is just take a look here at the consideration that the Brazilian market, the EWZ, has already given a major sell signal, as you can see here. So that could also be, since the stock is a Brazilian market instrument, the fact that the Brazilian market has already confirmed this double top, one can lean to the potential that the stock will not break out and hold above 10.56, and that the Brazilian market itself is telegraphing that the stock is due for a plunge. So while we might be looking at the possibility of an entry, it could actually be a sell signal. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. EACS. See you on the next video.